You are listening to a story that may permanently alter the way we discuss global finance. Imagine a day that historians might point to as the moment certain. Emerging market currencies were formally embraced by the mainstream Western banking system. That day, October 6, 2025, has potentially unfolded with an announcement from one of the most prominent financial institutions in the United States, an entity known for its highly conservative approach to global currency exchange. The news, which broke this morning, has sent immediate ripples through a very specific segment of the investment community, providing a verifiable pivot point for those who have monitored the Iraqi Dinar IQD and the Vietnamese Dong VND for years. The banking world is a place of rigorous standards and cautious expansion, making any deviation from the norm a major event. Chase Bank, a behemoth in the American banking sector, is the institution at the center of this story. For decades, the Iraqi Dinar and the Vietnamese Dong have existed outside the normal flow of major bank-to-bank transactions in the West. Their trade has largely been relegated to specialty dealers, small exchange houses, or specific regions, often accompanied by significant transaction costs and limited transparency. This historical barrier, which many believed was permanent, now appears to have been formally addressed and dismantled, signaling a significant shift in corporate policy and perhaps a larger reevaluation of these two national currencies. At precisely 9 a.m. Eastern Time, the official confirmation arrived, transforming a long-standing speculation into a confirmed reality. Chase Bank released a clear, unequivocal public statement announcing its new policy to service the exchange of the Iraqi Dinar and the Vietnamese Dong for its customers. The nature of the announcement, not a rumor, not an unofficial leak, but a formal communication from a financial powerhouse, lent immediate credibility and weight to the development. This move places the IQD and VND in the same service category as widely accepted international currencies, such as the euro, the British pound sterling, and the Japanese yen, marking a huge symbolic and practical leap forward for a vast global community of currency holders. This is more than just a procedural change. It represents a momentous validation of a long-term position. For years, individuals have held these currencies, patiently waiting for what they believed would be an inevitable shift toward greater international recognition and stability. They endured high fees, faced skepticism from mainstream financial commentators, and often navigated a fragmented, opaque exchange market. The formal inclusion of these currencies by a major U.S. financial institution like Chase Bank directly confronts the arguments of the critics and provides a safe, regulated, and transparent channel for conducting exchanges, focusing first on the Iraqi dinar. This currency's story has always been intertwined with the immense natural resources of its home country. Iraq holds some of the world's largest proven crude oil reserves, a massive economic anchor that logically suggests a powerful future for the nation's financial instruments. However, the history of conflict, geopolitical turmoil, and domestic instability has kept the dinar's international status depressed and its value relatively weak for an extended period. The inclusion of the IQD in Chase Bank's official exchange offerings indicates a major financial player's confidence in Iraq's direction. A decision of this magnitude by Chase Bank is not made without a comprehensive assessment of geopolitical and economic risk. The move suggests that the bank's internal analysts and financial strategists perceive a tangible trend toward greater stability and potential economic resurgence within Iraq. By officially recognizing the IQD for exchange, the bank is signaling that the long-anticipated structural and financial reforms in Iraq may be reaching a point of critical mass that warrants inclusion in major foreign exchange services. It serves as a strong international indicator of a brighter financial outlook for the nation. The narrative surrounding the Vietnamese Dong VND is fundamentally different but equally compelling in the context of this announcement. Vietnam has, for quite some time, been highlighted as a rising economic power in Southeast Asia. The nation's economy has been characterized by robust growth, driven by a powerful manufacturing sector, significant foreign direct investment, and booming international trade. As global supply chains have diversified, particularly in recent years, Vietnam has increasingly become a central hub for production and export, challenging established manufacturing centers. Chase Bank's formal decision to offer the Vietnamese Dong for exchange services serves as a powerful testament to the country's accelerating economic ascent. The move recognizes Vietnam's elevated status in the global trade ecosystem. effectively placing the VND alongside the currencies of other major trading nations. This level of institutional recognition can further solidify global trust in the Vietnamese economy, potentially encouraging more international commerce and investment. For long-term holders of the Dong, this is a clear professional acknowledgement of Vietnam's impressive progress and its strong future trajectory. One of the most immediate and practical impacts of this announcement concerns the historical difficulty of exchanging these currencies. Before today, transacting with the dinar or the dong often meant seeking out specific, often geographically constrained currency dealers. The process was often opaque, exchange rates could fluctuate dramatically with high spreads, and the risk of encountering fraudulent schemes was a recognized danger for the uninitiated. This lack of a standardized, trusted channel was a persistent barrier to legitimacy. With Chase Bank now entering this market, that barrier is substantially reduced. Customers can perform currency exchanges directly through an established, federally regulated banking channel. The exchange process is expected to be standardized, transparent, and operate under the oversight of one of the world's most trusted financial brands. This shift fundamentally alters the transaction environment, replacing uncertainty with institutional security and legitimizing the process for millions of currency holders worldwide. However, the new exchange service is not without its structured guidelines, which are clearly defined by Chase Bank to ensure orderly and compliant transactions. For relatively smaller exchanges under a specific threshold dollar amount, the bank has established a flat-rate service charge of $15 for larger transactions that exceed that initial threshold. The fee structure shifts to a proportional charge of 1% of the total exchange value. While a cost is involved, this structure is generally seen as significantly more favorable than the variable and often high percentage markups previously imposed by smaller, non-bank currency dealers. Furthermore, to manage risk and maintain regulatory compliance, the bank has implemented specific limits on the amount of currency an individual customer can exchange. A daily maximum of $5,000 equivalent has been set for individual transactions, alongside a cumulative monthly limit of $25,000 equivalent. Business accounts are provided with a higher capacity for exchanges, but this expanded service is contingent upon providing enhanced verification and due diligence documentation. These rules are crucial for maintaining the integrity of the financial system and adhering to strict U.S. and international anti-money laundering regulations. The ripple effect of this action extends far beyond the customer base of Chase Bank. In the financial world, particularly among major institutions, actions often set precedents that competitors feel compelled to follow. When a market leader like Chase formally opens a new category of service, it immediately puts pressure on other financial giants, such as Bank of America, Wells Fargo, or Citigroup, to re-evaluate their own foreign exchange policies concerning these and other emerging market currencies. This decision could well be the inaugural domino in a series of institutional changes that fundamentally reshape how Western finance interacts with the global South. For the Iraqi Dinar and the Vietnamese Dong, this institutional embrace could mark the beginning of a broader journey toward wider global trading acceptance. The increased accessibility and legitimacy provided by a major U.S. bank may attract a new segment of institutional investors and traders, potentially increasing global liquidity and formal trading volumes for these currencies over time. The significance of this initial step, in effect, provides a professional platform that could accelerate the currency's inclusion in more varied financial instruments and trading platforms. It is important, however, to contextualize this development within the inherent realities of currency markets. The fact that Chase is now facilitating the exchange of IQD and VND does not, by itself, guarantee any specific trajectory for their value. Currency valuation is a complex phenomenon influenced by a myriad of domestic and global factors, including governmental policy, trade balances, inflation statistics, and international capital flows. Iraq and Vietnam, while economically promising, both still face structural challenges that could impact their currencies. Iraq, for instance, continues to manage long-term issues related to political stability and the rebuilding of its national infrastructure. Vietnam, despite its rapid growth, must carefully manage its development to avoid the pitfalls of overheating or over-reliance on a single economic sector. Investors and currency holders are reminded that this announcement is a significant moment for accessibility and legitimacy. not a guarantee of financial outcomes. Informed caution, thorough due diligence, and a realistic perspective remain the bedrock of responsible participation in any currency market. For the community of individuals who have held these currencies for many years, a group that has often operated in the shadow of mainstream finance. This news is fundamentally empowering. It resolves a significant element of risk, the uncertainty of when or if a fully regulated and universally recognized method of exchange would ever materialize. The removal of reliance on opaque, high-fee dealers and the security of a major bank transaction are profound benefits, providing a sense of control and official recognition that was previously absent. The new reality presents a strategic decision point for every Dinar and Dong holder, whether to use this newfound access for immediate exchange or to maintain their position and await further market evolution. The question of timing, whether to liquidate now, securing liquidity, or to hold on for potentially greater gains as market dynamics shift, is a complex financial calculation. The choice will be informed by individual financial goals, risk tolerance, and one's outlook on future geopolitical and economic developments, including the potential for other major banks to follow Chase's example. Looking ahead, Chase Bank has also revealed its plans for a comprehensive digital integration of the new exchange services. Later in 2025, the bank intends to allow customers to monitor the exchange rates for the Iraqi Dinar and the Vietnamese Dong directly through its official website. This will be followed by the capability to place digital exchange orders online, providing a new level of convenience and rate transparency that currently exists for major G7 currencies. The digital expansion is slated to continue through the end of the year, with the integration of IQD and VND monitoring into the bank's mobile applications, offering on-the-go rate tracking and transaction flexibility. Beyond this initial rollout, Chase's longer-term vision includes introducing wire transfer capabilities for these currencies. This would be a crucial development, enabling direct, secure international transactions and further integrating Iraq and Vietnam into the formal global payment infrastructure. It is crucial to recognize that the process leading to this announcement involved extensive regulatory navigation. A change of this magnitude requires a thorough review and formal approval process from key U.S. banking and federal regulatory bodies. Chase Bank's successful navigation of this process means that authorities have scrutinized the plan, assessed the associated risks of handling these two currencies, and ultimately deemed the service compliant and secure under U.S. law. This high level of regulatory approval provides a necessary layer of institutional confidence for the general public. It signifies that the action is not simply a business decision by one bank, but a step that has been formally vetted for legality and security. Such regulatory endorsement marks an indisputable milestone in the institutional journey of these currencies toward full international legitimacy and acceptance within the world's most regulated financial market. The broader implications of this precedent are significant for the entire landscape of emerging market currencies. If other financial institutions adopt similar policies, the perception of a wide array of currencies once viewed as too exotic or risky could fundamentally change. The ability to perform exchanges for IQD or VND at a local, mainstream bank branch would become a normalized financial convenience, a concept that was almost unthinkable in the recent past. This increased accessibility will inevitably bring more visibility to these markets, potentially attracting a wider base of interested participants and further increasing global demand. However, with increased access comes a corresponding need for individual responsibility. Currency markets are inherently volatile, and the value of the Iraqi Dinar and the Vietnamese Dong will continue to be subject to rapid shifts based on global events and domestic political or economic changes. Chase Bank has explicitly stated its intention to support this new service with comprehensive educational resources. The bank plans to disseminate official guides outlining the history of the currencies, the inherent risks, and the economic opportunities associated with them. This commitment to education underscores the importance of informed decision-making. Ultimately, while the bank is providing the pathway, the decision to engage in any exchange or to hold a position remains solely the responsibility of the individual currency holder. The symbolic value of this date cannot be overstated. For a long period, those holding the Iraqi Dinar and Vietnamese Dong felt their assets were marginalized and unrecognized by the formal global financial community. October 6, 2025, represents a powerful break from that history, a moment when a highly influential institution extended formal recognition. This event transcends the simple act of currency exchange. It speaks to the shifting balance of global finance and the growing necessity of integrating emerging economies into the established Western banking framework. As the financial world moves forward, the immediate months following this announcement will be keenly observed. Will competing banks quickly follow Chase's lead? How will the increased access influence demand and the current exchange rates for the dinar and the dong? Will Iraq's economic and political environment demonstrate the sustained improvement that Chase's decision implicitly validates? Will Vietnam maintain its rapid, impressive economic expansion? These questions will define the next phase of this financial story. For the average individual who holds or is considering these currencies, the practical takeaway is clear. The opportunity structure has fundamentally changed. A new, secure, and transparent option for exchanging these currencies is now available through a highly reputable financial entity. The choice to exchange, to hold, or to follow the market is now backed by institutional access. This is a moment where the conversation shifts from the abstract hope of eventual access to the concrete reality of a decision that must be made. Placing the power and responsibility firmly with the currency holder, the bottom line is that October 6, 2025, has already earned its place as a significant benchmark in modern financial history. It is the day a major American bank formally incorporated the Iraqi Dinar and the Vietnamese Dong into its exchange services. It is the day millions of currency holders received a new degree of legitimacy and access. The discussion is no longer centered on if these currencies would ever be recognized by the mainstream, but how this newly opened access will be utilized. The decision to exchange now or to maintain a position is a personal financial choice. But one thing remains certain: the new chapter for the IQD and VND has officially begun.